Hey people, this is Rainer here from tradingwithrainer.com. Welcome to another edition of my Forex analysis, alright? For those of you who have been following me for quite some time now, I would like to say a big thank you to you guys out there guys and girls out there, because without any of you, I guess there wouldn't be any inclination for me to do these videos on a weekly basis. So a big thank you. And for those of you who are new, I would like to say welcome aboard, alright? Because what I do each week is that I identify the trend on the higher time frame, and I look for an entry signal usually on a 4-hour or daily charts. So usually my type of trading is more towards the swing and position trading. So that's what I do each week, putting out ideas, my thought process, and even analyzing or reviewing my trades. After it's, for example, I cut the trade and then there's something to be learned, I'll actually review it, and we can all learn together as one. So without further ado, let's look at the first pair I'll be looking at this week. This is the chart of the dollar yen, and as you know, I've been very keen in this pair for quite a while now. Reason being, I've mentioned that this pair is actually still in an uptrend, right? And you can see that there was this triangle pattern that formed here. If I recall, it took about 25 weeks before it finally broke out, and price seems to be consolidating again. So I think price has been consolidating for about close to 25 to 30 weeks now. Okay, you can actually count the candles, how many weeks it has been consolidating, and based on time and price analysis, it should more or less break out in the coming weeks. That's what I feel. So which way should it break out? So if you ask me, I always say trade with the trend, and since the trend has not been broken yet, it's been supported by this 101 level, so I'll still look to long this pair in anticipation for a move to break out of this 104 level. So let's look closer at the price action on the daily chart, and you can see that how clear this pair has been contained between the 101 and the 104 in this false breakout over here. So looking at the order flow perspective, let's think about it for a moment, right? People who went long over here, right, and they did not get their chance to long, and price traded higher, retraced a little, traded higher, retraced a little. So it has not come back to touch this area of support or bounce, I call it, alright, for a long time, right? Ever since January 2014. So you can expect a lot of limit orders to be placed all at around this area over here. Lots of buy limit orders, because they want to get the best price, the best value. So it's not until somewhere where price retested this previous low over here, rarely higher, tested this previous low, and I can tell you traders will start to think, okay, maybe I don't want to buy that cheaply anymore. Maybe I'll just queue around this level. How about this level? I'll forego the value buy at here, and instead I'll look to queue over here. So that's what happened. They start queuing at this level, and we get a spike down, meaning those who queue at this level probably got taken out on their stops on this spike down. And right now, again, a similar thing is happening. Price is trickling down, close enough for your entry but not giving you, traded slightly higher, come close enough and not giving you the ideal entry you want. So where is the ideal entry I'm looking for? I'm actually looking for to long at this low of this week over here, because I'm anticipating that there's probably a huge stop loss order just below the low of this week, right? People who are already long on this bounce, on this bounce, and on this bounce, they're probably putting their stops, I'm guessing, below this low over here. So there's actually intention for, I would say, the smart money to actually push price lower, right? Trigger those stops and do a fake out and finally rally back higher. So I'm looking to long just at this low with about stop loss of 80 pips around here, right? So in anticipation that you'll just be a fake out and finally watching price trading higher towards the 104 level. So that's I would say, my speculation for this pair, and we'll watch how it plays out in the coming weeks. Alright, next pair is the euro dollar. Alright, looking at the weekly chart, you can't deny that this pair is actually still in an uptrend. However, ever since that Draghi came out and give a speech that say the euro is a little too strong for their liking, and this pair has been ranging ever since between the 39.50 and the 35 level. So you can actually connect a trend line, and see that it's actually still in an uptrend. So I would say the deciding factor where I would say this pair is tilt towards the neutral or downward bias is if these pairs take out this 135 level or even 133 level. Because if it does manage to close below here, and then I would say it's a game changer, and it's very obvious that we have our support level which is violated over here, and we even have our upward trend line, which you can see which will probably be violated as well. So these two things, if price does close below over here, if it does close below the 133, right, then this pair to me, will be looking for selling opportunities. So as of now, that has not occurred yet. There's just a conjunction. And so what do I expect in the coming weeks? So looking at the daily chart, you can see I zoom out a little. Price actually form a pin bar over here, and I can tell those candlestick pattern traders will actually all look to long this pin bar over here. Will I look to long? If you ask me, I would say no, not for me. And here are some reasons why. First up, if you look at the pin bar relative to the other candles, you notice that it's not exceptionally big. It's just an average size, or in fact even smaller compared to the recent candles. Right? Look at these bearish candles, and it just seems like a retracement towards the downside once again. So what do I mean by that? Looking at the forward chart, zoom out a little, you can see that here price traded lower, retrace, traded lower, retrace a little bit before slamming down, and right now price seems to be retracing. So do you think this little retracement could actually push the move back higher? That could be possible, but I would say a more likely scenario is whereby price trades lower, taking out the stops over at this low over here. So yep, I'm not too keen to long this pair despite the pin bar on the daily chart, because to me I feel that it's just a retracement. I could be wrong, but I'd rather be on the safe side. And looking at the way the retracement looks is at a down move, retrace here, lower. The next retracement could not even take out this high over here, so I'm signaling that the selling pressure is pretty strong. So, and it's now at the support at 135 level. So I'm guessing there'll be stops below this pin bar low as well as this low over here. So yep, just watch and see what happens in the coming week. I'll stay out for the euro dollar for now. So let's see another pair that I'd like to share with you guys. How about the New Zealand dollar? Right, this is a chart of New Zealand dollar weekly, and what we have is actually a bearish engulfing at resistance 88 level. So this candlestick pattern over here. So if you look at this pair, it's actually quite symmetrical if you ask me, right? Traded here for about 400 pip, then it rally. Traded for another 400 pip, then it rally. Consolidated for another 300 pip, and if you ask me, it seems to want to test the 85 level in the coming week. So let's see what happens in the coming week for the New Zealand dollar. At the moment, I wouldn't look to long just yet, but neither would I look to short as well, because price actually still in uptrend. So let's watch this pair on the side as well. So for the euro pound, this is my favorite pair by far for the month, because once a pair starts to trend, you should actually look to milk it as much as possible. Alright, you don't really need like many pairs a month to make money. All you need is actually just one pair, right? One good pair, one really trending pair, and just keep trading the retracement, right? Since the trend is still intact. So is the trend on the euro pound still intact? Yes, if you ask me, and here's why. Looking at the weekly chart, right, you can see that we have an approximately, based on the close, with another close to 150 pips before price will hit the swing low, right? Or should I say price would approach the swing low over here. Another 150 pips more to go. So imagine if you can get a trade with say a 20 pip stop loss or 25 pip stop loss, which is very possible on the forward chart. Alright, so and you can manage to get this 150 pips remaining. You're looking at easily 1 to 6 risk reward. So these are the beauty of trend trading, getting your entries on a small time frame and riding it on the larger time frame, and that's what I do all the time. So looking at the weekly chart of this euro pound, the trend is still intact. Right, looking at the daily chart, I would validate my belief stronger, because with this downward trend line, you look at the lower highs here, 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 and you notice that price on the daily chart has not taken out a lower high. I mean, it's not formed a higher, I would say a higher low, or it has not taken out the previous lower high over here. So it's telling you that the downward momentum is still insane, it's still down there, and you should look to short the retracement. So chances are in the coming weeks, price will just retrace a little bit higher, and we can look for opportunity to short. So with that, let's look at the forward chart, and I can say that I did added an extra lot here and I got stopped out, right? So what happened was price from this support over here consolidated and it tanked down, retraced up a little and started consolidating. So I'm guessing there'll be a cluster of stops just above here because there's previous support and resistance, and price seems to keep consolidating for a while over here. So there'll be a cluster of stops over here. So I went short at this resistance. However, my stop loss was too tight. You can see this green bar spiked up. That's where I got stopped out. And the next thing we know, came back lower down again. So that's why we talk about the fake out that the smart money likes to do. Take out those stops and trade it, and trade back price lower where it was before. So yep, for the euro pound levels I'll be looking at again. Alright, so key levels you should be paying attention to in the coming weeks will be here, 79.70. A key interest level where you can look to short should price trade lower. Alright, so what could also potentially happen is that in the coming weeks price just simply trade lower, take out the low over here, and possibly could come back, retrace, and test this previous swing high over here. So that could be another possible scenario, a likely one if you ask me. And yep, that's all I have for you guys this week. If you do enjoy what I do, you can actually join me on my Facebook discussion group. That's where I post out ideas on a more intra-week basis, more responsive if you ask me. And you can head out to my website for free articles and free educational materials. So with that, I wish you guys a pleasant week ahead and good luck and good trading. Thank you.